I'm too excited. Okay, thank you everyone for joining the session. We still have people coming in. Okay, thank you everyone for joining. And today's is the sixth peer-to-peer session. And we're already almost also halfway in the simulation phase. And today we're gonna discuss the topic on how to negotiate and what to ask in a pitch. So yeah, today's agenda, we're gonna discuss mostly on this topic with our esteemed speaker today. And then without further ado, I'm gonna quickly introduce about the session. As usual, the peer-to-peer session is designed as a way for the new angels, for the more experienced investor to share to the aspiring angels in the community. And we do different topics in different weeks. And for today's discussion, already next, we have Christian Sutardi joining us today. Christian is a venture partner at Kopital Ventures. I will read his profile for a bit. Christian Sutardi is an entrepreneur, investor, and maybe best known as the co-founder of Kopi Kenangan, one of Southeast Asia's fastest growing coffee chain, which revolutionized the coffee market in Indonesia. And after the success of Kopi Kenangan, which has attracted substantial investment, Christian founded Kopital Ventures, which aim to fund startups across Indonesia. And for this, then I would like to invite Christian himself to introduce yourself. Maybe we can pin him. Drop the screen. Hello, Christian. Thank you for joining the session.
Hi.
Thank you for your time. Okay, hope everyone is as excited as me for today's discussion. Before your introduction, maybe also to give everyone the general idea what we are trying to get from this session today. So we want to help the angels understand on what they should look and listen for, especially when approached by startups or founders on pitches. And hopefully Christian can also share real life tips, do's and don'ts, and examples of the negotiation dynamics that are constructive, but as well founder friendly. So without further ado, maybe I would like to give the space for Christian to give a brief introduction of yourself.
Maybe also before we start, so how is it structured today? We have, I guess, like 20 minutes of interview or panel discussion. Then we go into Q&A.
Yes. So we're gonna do more of a talk show format. So I will give some questions, some guiding questions, but also we later give the space for the angels in the room to ask if they have any questions. We're gonna do it quite casually and chill. So it's like a peer-to-peer session sharing.
Yeah, that's good. And how many people have joined today?
So today we have in the room around, I think, 15 angels, but because of the timing, mostly people come also during the middle and towards the end.
All right. Okay, cool. Thanks for inviting me, Raka, and Daniel as well. Maybe a quick introduction about myself. So I'm Chris. I'm actually half German, half Indonesian, just like Daniel, who invited me. I spend most of my summers here in Indonesia. And I think I want to connect my introduction directly with investments. So I spend most of my summers here since I was a little kid, always wanted to work here. Then finally in 2006, I did an internship at the Indonesian Stock Exchange. And at that point, I was a business student. So coming back from there, which I really enjoyed, I decided to major in finance and investment banking. I think it also coincided with reading this super cliche book, Rich Dad, Poor Dad, right? Where he has this cash flow quadrant where you move from being an employee to being self-employed, to being a business owner, and then finally You can become an investor if you want, if you're lucky. And so that kind of clicked with me. And it was around that time that I thought, okay, at one point, I want to be a very independent investor, and yeah, maybe retire before turning 40. So that were my sort of goals. So I wanted to be very aggressive over the next 15 or 20 years. Finished my studies, and then I worked in private equity first in Hamburg before I finally had the chance then to move to Indonesia for Rocket Internet, which is a German company. It's sort of a startup idea incubator or accelerator. At that point, they were very known for just copying ideas and rolling them out all over the world. And at that point, they were just opening Indonesia, and I came to Indonesia through Singapore to work with Foodpanda, which was a delivery company, right? So at that point, they had three business models that they wanted to start in Indonesia. One is the Lazada model, which got acquired by Alibaba. Lazada is basically, the idea was like Amazon. Zalora was like, that was basically fashion. And Foodpanda is, I don't know, it's what basically GoFood is today. So I stayed with Rocket for exactly 1 year. Then tried my luck as an entrepreneur the first time as a founder, which yeah, was a very good experience. But at the end of the day, we had to return the company to the investors. And really at that point, that was 2013, early 2014. Three people asked me if I wanted to join the VC. And I was always excited about VC, venture capital. I met three of them individually, and they all asked me if I want to join. One of them was my former boss. And so I was kind of confused, who should I join? And then it turns out last moment, oh, they're talking about the same company. So basically at that point, I had the privilege to be the first and only associate 2014 for Monkshill Ventures. I mean, I call it a privilege because I was able to learn directly from partners, very, very successful people, and really absorb the knowledge, the thinking, the decision making when it comes to investments. If there's one idea that really is super valuable until today for me when it comes to investments, when it comes to evaluating business models, that's the concept of atoms and bits. So bits is basically software, and atoms is physical stuff. Very clear. Software is very easy to scale compared to atoms. And now it's my simple framework to evaluate businesses when it comes to scalability, right? Because when we talk about angel investing, yeah, making money fast or losing money fast, right, is what you're aiming after, and that's you know, that only works with scalable business models. So I really like to see the impact of bits on certain business models, right? I guess 15 years ago or 10 years ago, it was really about only bits and no atoms, right? Back then, for example, we also had the term sheet of Gojek on the table, but the idea was, oh, they have their own jackets and helmets. That's atoms, so it doesn't really come and work for us with our thesis. But the way we are looking at it now, it's how can bits improve atoms, right? So that was probably one of the big learnings that I had at Monkshill Ventures. And I started a furniture company called Fabelio, which we ran for roughly 6 years, 7 years. Big issues with investors. And yeah, also, again, big learning. So I tried to look at it always in the positive way. So a lot of learnings. And then actually in between, while running Fabelio, I started to act as an angel too, right? So I think in the introduction it said I'm a co-founder of Kopi Kenangan, but actually it's more like James, Ed, and I, we are friends from way before actually the time 2006. And yeah, we were looking for a dividend kind of cash flow business. So it was never really set up as a startup, right? But yeah, that's also where you can see this bits and atoms idea, right? So we were not thinking of having a big store, really nice seating. No, it's more like acting really, really asset light because that's much more scalable. At that point, we called it grab and go. That was the story we went with. But yeah, so in that sense, I was not really a co-founder. Nobody was full-time at that point. So James, Ed, and I, until we raised our first round. Then my wife, who has been in startups for many years, the same as me, she became the CMO. So maybe it's rather her who is the co-founder. Yeah. So anyway, yeah, Kopi Kenangan was a pretty good investment. Me always being a little bit more conservative, I decided to sell secondaries relatively early. So I still have shares, but at 3 points in time, I was able to sell secondaries. So it also allowed me to kind of invest my returns or reinvest my returns into other startups. Yeah, maybe talking a little bit about the track record. So roughly I did 25, 30 investments. So it's one unicorn, 7 centaurs, $100 million valuation. Yeah, I guess it was a lot about timing as well, obviously. But yeah, Kopital Ventures. So what's the link? Obviously, Kopital it's a pun on capital and copy. But even before that, after the first secondaries, what we did is we created a friends and family fund called Kenangan Fund. So it was not a GP-LP structure where we don't have any management fees, but was more that Ed, James, and I, we were looking for deals and invested the money. It was a very successful fund because after 1 year, we were able to recoup the funds, right? So the DPI was already one after 1 year from two really great investments, I would say. Meaning that for 9 years, if we put it in comparison, we are just running free upside. So of course, a lot of people were asking, hey, how can I get access to your deal flow? So we created a network called Kopital Network, which was basically the evolution after Kenangan Fund. Yeah, the group consists of a lot of other founders, VC partners or associates, analysts, and so on. But yeah, as the ecosystem developed, funds became bigger, and there were not many people who issued $100,000 or $200,000 checks. Yeah, let's say we're looking at the larger regional funds or Indonesian funds also, who suddenly had sizes of 200, 250 million. They were looking for ways to get deal flow, right? They actually encouraged us to start a VC. So Fundy and James said, okay, it's okay, let's do it. So now Kopital Ventures is basically 16 million. So we initially wanted to do 10 million, then we became 12, then 15, and now it's a 16. But now really it's a hard cap. We don't take up more money, so it's a $16 million fund. We focus on idea stage, super early stage. Yeah, we hope that we are founder friendly and that we have the best access to deals in Indonesia. And yeah, I'm more or less part-time as a venture partner. Yeah. So I guess that's a little bit all over the place now, but I wanted to connect my introduction to why I'm investing, how I'm investing.
Okay, thank you, Christian. Yeah, it's such a thorough introduction. I think I note here you've been in institutional investment, you do angel investment, you do entrepreneurship as well. So basically you've been in different perspective, and yeah, hopefully that can be very beneficial for the angels today. And I think I want to highlight these concepts of atoms and bits. So if I don't get it wrong, basically bits is more of the digital topic, digital solutions, while atoms is more of like products. And I think I just also just find out that actually, yeah, Kopi Kenangan was initially an investment for you, yeah, part of these atoms. Or
Yeah, so I mean, back then with Monkshill, we feel we kind of missed out on a few investments because we only looked for bits. So it was
okay,
binary, right?
yeah,
But now it's really how can bits at least support atoms? But at the end of the day, it's how do you create asset-light business models, right? So the whole idea is really scalable models. That's what you want to invest in. And I think for me as myself, if I I was thinking today, what exactly is angel investment? What does it look like in Indonesia, across the world? But for me, I'm always thinking that angel investment is really, you want to make money, right? You invest and hopefully return more. So for me, it's purely very pragmatic, just trying to make money. And if you basically design it or put it on a wall, obviously, the way to make money is to invest in scalable business models, right? So what is the pure atoms model? Maybe just as an example, if you run a, let's say so Kopi Kenangan should actually be linear, right? But we can get to that later. But an example is, of course, a bakery, right? You have one customer who wants to buy one bread. If you have 5 customers, you have to make 5 breads, right? But if you, let's say we look at Gojek, you create the platform once, and then it doesn't matter if you have 1,000 drivers and 1,000 customers or 1 million, right? Because it's already there. It's software. It's super scalable in an exponential way. Whereas the pure offline models, let's say an ice cream shop, it's really very linear, right? So for one customer, you put in one effort. So one input is one output. So it's very linear. It's just a line.
Yeah. It's interesting because in this program especially we try to balance that, so the opportunities that we introduce to the Angels communities has both the bits but also the atoms. And maybe a few years back, like 4 or 5 years ago, it was always, especially in Indonesia, everything goes bits, everyone making platform. But now more people are starting to looking back more of the, I think, the atoms model that you just mentioned, but also the atoms not like just fully atoms, but also supported by the digital. And because you also mentioned that Kopital Ventures supports the even idea stage, super early stage. So this comes to a point, and you mentioned you have 20 to 30 investment, because the main focus of today's discussion is really how to start sorting that when people come pitching at you. So maybe the next question is,
Maybe, sorry,
yeah,
I think I quickly
sure.
clarify. So the 25, that is my personal angel investments, 25, 30. And afterwards, Kopi Kenangan or Kopital Ventures, that's on top of that. Also,
Yeah.
maybe this
On
context
top.
is also very important. Yeah, I guess it sounds very easy. Yeah? It sounds very logical, but it's, the way these 3 stakeholders act, the founders, the angels, and the VCs, it's also very different, right? So VC, how do they make money? They get management fee, then they get a profit share, which is called carry after 10 years. For an angel, you basically get 100% carry, right? So every profit you make is your own, and you don't have a 10-year life cycle, right? So you can just come in and out over, I don't know, 40, 50 years, you will have your home runs. So for an angel, also, if you look into all these studies and research, it's very likely that you can become quite rich. As a founder, right, where you have all your eggs in one company, it's much, much harder. But if you, of course, hit the home run, then you're very, very rich. But they're really not aligned, right? So as a founder, you have 100% of your net worth in one company. If you're an angel, I have my net worth. I mean, we have it in whatever it is, right? It can be a portfolio of 25 startups. It's in public markets and so on and so on and so on. Yeah? And so the risk appetite is very, very different. And I think that's also very important, that an angel is not the private guy who's a VC. So the incentives and reward structures very different, very different. That's why for an angel, it's actually quite dangerous to learn too much from VCs, in my opinion. Yeah, because you can roll your dollars, they cannot. You make 100% profit on your profits, they don't, and and you have all your life to invest, and they try to raise a new fund every time, right? So it's not aligned.
Yeah. Yeah, agree. But I think it's yeah, we think also sharing from especially like you, because you've been also doing both, so it gives the angels here as well a glimpse of where to put that line, like, between where the balance between managing your own money in angel investing, and the difference when talking like through a VC. But maybe
Yeah.
generally, if we go back to the topic of like how to negotiate, how to negotiate and what to ask in a pitch, because most of the angels here are maybe still going to be first time investor and so on. So and what we do in the simulation phase is really start to pushing the angels to meet with investors. So if we go back to that basic question, maybe for you, what does a good pitch feel like? And maybe like generally, how do you normally approach a pitch from founders?
Yeah. Okay. Maybe then we can probably ignore that I'm a venture partner now, and then I just go back to, let's say, 5 years ago when I was an very active angel. So to be honest, I'm not super active as an angel anymore. So all my allocation for startups is within Kopital Ventures. Yeah. So, but yeah, my approach back then would definitely always be that I want to see as many deals as possible. But my number one filter was always introductions from friends. Um, Fundy, for his fundraise deck, he actually also asked me, can you map out for how long have you known founders before you invested, right? So for me, it's also in general much more about knowing the person you put your money into. The founder, will the founder be a big success in life, right? Not so much the startup, you can always fail, right? But will the founder be a big success in life? That is also a very important preparation for me to understand, okay, what struggles and what journey has this person taken. So if I look at all my absolutely most successful investments, yeah, let's say Kopi Kenangan. So I've known them for 11 years before investing. I don't know, there are other companies. I've known the founder for 5 years, 6 years, and so on, right? So I've always known them before they actually started the company. So that was very important for me, because yeah, at that point, maybe I also didn't have as so much money to play around with. So you have to trust your money with the people first. That's for me the most important thing, because there are many great ideas out there, right? So, and of course, probably in your incubator, you receive a lot of very, very similar ideas in the same market, maybe even the same product. So the big differentiator is always going to be the founder. Yeah. And since it's still idea stage, yeah, I didn't look too much into data. I just wanted to see if the founders are excited, right? So I'm usually a very optimistic guy. That's maybe also my weakness, that I get very overexcited if I like ideas. But yeah, in the initial pitch for me, it's all about the vibes. Do we click? Do we connect? Do I like his or her thinking? Does it make sense even? Yeah. So for me, the greatest ideas are always, well, it makes so much sense. The only thing that doesn't make sense is that nobody has been doing it yet. So that's usually what I really enjoy. But as an angel, it's so much more a people business, um, that you want to meet people and click and vibe and see that they are big thinkers. So no, not much of preparation for me.
Okay. Thank you, Christian. Because in our previous peer-to-peer sessions, also I think the speakers also always talk about the invest in founders. So here again, in another session, you kind of re-strengthened that statement that investment is very important, because you mentioned you start from introduction from France and to the extent of to knowing them even until 11 years. But you were also mentioning that as an angel investor, what you aim to do is to have as many deals as possible. So maybe the what most people here are curious, like if they are a first time angel investor, maybe they don't know a lot of founders, especially even until 10 years, 11 years. Maybe do you have in your experience like how to one maybe build that trust with founders they just recently met, and but also the other thing is because you were also trying to get many deals as possible, what do you look for when it comes to in terms of the opportunities of the investment?
Yeah, so the first tip actually in this context, and I always tell people this, and it sounds so easy and maybe too obvious. It's so obvious that people always forget it. If you're an angel investor, or if you want to be an angel investor and you're really serious about investing, then everybody has to know that you're serious about investing. Otherwise, why would I approach you? You're not selling a tennis, you're trying to sell tennis shoes, let's say, and I don't know it, then I can never buy it, right? So you have to let everybody know that you're investing. And then so easily, a lot of people will approach you. I assume most of the investors here in this room are based in Jakarta. There's this saying in the community, it's a big city, but a small town. So deals will just come left and right and front and center if people know that you're willing to invest. So that's so easy. Once you let everybody know that you're investing, it's just flying in. It's really as simple as that. Then, so I'm not really a fan of networking. It doesn't come natural to me. So I don't go to network events. Usually I don't go there. But for me, it was just letting them know. So let's say the case of Kopi Kenangan, I told Ed and James, hey man, as a startup founder, I'm always waiting for my big payday. But in the meantime, I also want to invest a little bit and acquire assets or invest companies, right? If they hadn't known, they hadn't asked me. Just as simple as that.
Okay, thank you. I think that's a good call out to
It's just so obvious, but people forget.
yeah, I mean I personally I'm really happy with that call out. It's like if you want to really be serious about angel investing, I think the point of letting everybody knows that you want to do investment is important, and that's how you get connections. uh so a bit about the following up to that. So maybe one of the models like the Angel Studio program is trying to build this community of angels. Maybe your views on that. You mentioned you don't like to come to networking events and so on, but do you think that being in a community or being in a part of a network helps in doing angel investing, especially when you started, and maybe from your experience, how
Yeah,
does it has helped you?
yeah. So I'm not saying that I'm against networking. I guess for me, yeah, I've been in startups now in 2012, so it's 13 years, right? So of course, I met a lot of people. A lot of my peers have grown into good positions in startups, in finance, and yeah, in VC. So that my network always brings me some deals. Yeah. But yeah, again, I think it's actually a good idea to attend these events and get connected because the deal flow will come from connections, from networks. Yeah, it's you have to. It's yeah, network. You have a lot of the nodes. You just have to connect, and at one point it will float to you, Chris. And, you know.
Okay. Yeah, sorry.
Yep.
So connections, networks, it's a good way for you to
Mm.
sorry,
Mm.
because I can hear myself here.
Ah,
Okay. Uh
yeah, maybe even in LinkedIn, people should just put, okay, angel investor looking for deals. Yeah, people will send stuff. I guess really to just start out, you have to monitor and screen the whole landscape ecosystem. I wouldn't encourage to jump right into it, but and also very often I see that you have to hold back, right? Because so many ideas are exciting, And we usually, as an angel, you have this bias to action, right? So you want to invest and get in the game. But I guess the first step is get deals in and look at a lot of different deals. It's very easy to see, okay, this is a bad deck, bad pitch deck. This is a great pitch deck. Yeah, so it's also a learning process, of course, right?
Yeah.
Um,
So we're going to that because we discussed, okay, it's good to get connected, so you start to get deals or offers coming into you, and then yeah, that rush. Oh, I think I want to start. I want to start. And you also mentioned that you were an optimistic person as well. So maybe from your experience, the 15, 20 years of experience, then how do you start to strike that balance between protecting yourself, but also to building a good relationship with the founders? Because as you mentioned, knowing the founders is a very foundational. So when maybe a good time to start just from getting to know them and to start considering investing.
yeah, I guess so. Also, probably in this context, very important that you, as an angel, you should have some sort of branding around you. So you always, how do you protect yourself, right? That's your question. Yeah, I guess the first thing is it's actually quite simple. So people have to like you, they have to trust you. Otherwise, why would they approach you, right? So this protecting, what? How exactly do you mean that? Is it also already going towards negotiation, or
Yeah, maybe along the way you start getting to know
yeah,
the founders and to uh start considering of doing investment, and because of the today's topic as well is how to negotiate, right?
okay, cool.
So
Yeah.
basically on that transition between
Yeah, so
starting to
usually,
decide.
so when I hear the word protecting, it feels like I have a lot to lose or something negative is going on. Yeah, I feel if there's any doubt in an interaction with the founder, just step out, right? Um, so why take the risk when vibes are off already? So it's just already so difficult. It's already so risky. The basic thing is the interpersonal trust. If that's not checked, then I wouldn't even step into this kind of relationship with such a founder. Um, so yeah, again, there are not many data points. So any sort of data points that you can get, you should assess really seriously. And one of them is, do I feel like in this relationship I need to protect myself? That's definitely a red flag.
Maybe just because you mentioned red flags, can you share like your top red flags? Because you
Oh,
mentioned you like the vibe, then when you start to uh, decide to invest, but then maybe the other way around, you have a clear red flags, maybe that you can
yeah.
share.
So first, not really red flag, but what doesn't make sense for me is if the founder thinks too small, right? You need dreamers, you need guys who want to build big things, first of all, right? So if they are thinking too small, that's not a red flag, but it's just then I'll scratch off that idea. The other hand, I don't like people who think too complex and too smart. And yeah, buzzwords for me always a red flag. Um, what I never like is if founders are try to create FOMO when it comes to closing the round or valuation FOMO. Like, okay, this investor's already in. I need your answer by tomorrow. Then I like, yeah, then you don't have to wait until tomorrow. It's not going to happen. And then basically just basic understandings of a business. If I ask, okay, what are unit economics, what it's going to look like in 5 years, they don't have any idea. Then yeah, red flag, red flag. And also, of course, getting a sense of, you ask a question and, what I feel founders who are not that good, they never say, I don't know. They always say, okay, they deflect, they come up with some random ideas on the spot. That's something I don't like. It's a red flag for me too. Just accept that you don't know, just tell me, I'll figure it out. End of today, I'll come back with you with the answer, to you with the answer. That's great, that's okay. So
Okay.
again, right? It's again vibes again.
Yeah. But I think because you share this in a very real life situation, like yeah, like the FOMO, it's something that sometimes founders do when they're doing capital round, and yeah, maybe some angels here haven't had that, been to that position of being.
But
So
yeah, but on the other hand, so it's also up for debate. So I personally, I don't like it because I want to be someone who likes the relationship, right, with the founder.
yeah.
So you can always call me, but and we can be friends, something like that. But if you try to FOMO me, then yeah, I personally don't like it. I can see that maybe you miss out on deals because it might be true, right? Maybe Sequoia just gave you a nice check, but yeah, it is what it is. So I also don't want to just invest in a company where I don't have any interaction at all. So if the VC is in it, then probably I'm on the backseat already.
Yeah, it's interesting you brought it up because I was also gonna ask about, from your view and your experience, how do you think an angels can provide value beyond just putting money, just putting capital?
Mm, yeah, that also always depends on the founder, but I usually so I'm not super proactive. I wouldn't call founders and say, "Hey man, how can I help you? How was this week? How are things?" But I definitely let them know whenever there's any issue, whatever it is, with the employees, legal, or with the new VC, with introductions, with your term sheets. Just you can call me anytime, no problem at all. Yeah, and we can just meet right away in common grounds. Ashta, I'll be there in 10 minutes and we can talk. But I personally, I don't try to super proactively, help founders because I feel it's also disrupting, or interrupting their focus.
Okay.
Just let them know that you're there if they need anything.
So basically providing, yeah, support if when they need it, but also maybe the questions as well is, would that support or maybe assets that you have as an angel investor, would be it network, be it an expertise and so on, can be something you bring into the table for negotiation
So for me,
when you
it's
do
usually
investment?
relationships with bigger VCs that I bring to the table. Then yeah, I guess lawyers, SHAs with shareholder agreements. I know inside out, what's good, what's bad. So with those things, I really like to help. Then of course, these days, what happens? Do you know a logistics company? Okay, I connect you. Do you know a good marketing company? Okay, I can connect you. That's something I can do. On the other hand, let's say specifically, for Kopital Ventures, you have a great operator like, for example, James, right, who was able to come up with SOPs to, I don't know, by now scale it up to 1,000 outlets. So he can also come to you on the ground and help you on the operating side. Yeah. So I guess every angel should also be aware of what they can bring to the table, right? Because at the end of the day, what you just said, it should be added value because the best deals will have a lot of demand, and $1 then is not just $1, right? I maybe bring $1 plus the outlook to get introduced to all the big VCs. Then I win against the guy who only brings $1, right? And nothing else on top. So you want to be in competitive rounds. And then you have to bring added value.
And yeah, then my question after this, maybe we can open up the question and answer round. Also, going back to giving support, giving the, as you said, guidance to the founders, and because at the beginning you also mentioned that investing in founder is very important. Maybe from your experience, how do you assess if a founder is coachable and transparent, especially that aligns with your personality?
Yeah, I guess founders can be great actors as well and can pretend. So that's a good question actually. So how do you understand if maybe they become scammers, for example? How do you assess that? It's not easy. But you're right, coachable is also a very important trait. That is something you can easily find out, I think, during a pitch. What I just mentioned, you take out the pitch deck during the pitch and ask them some questions about a particular slide that you didn't understand or you find complicated or that maybe is wrong even. Then you can see how they react. Just ask a few tricky questions. But I don't know, but maybe on my side, I feel that I have some sort of understanding how people work. Maybe that's a little bit of an advantage or a strength. Not sure if it's true or not, but I feel that is one of my strengths, that I can see through people. Yeah, I guess then there won't be hints in a 1 hour meeting.
Okay.
Background checks, of course, background checks. We do background checks on all potential investments now. Maybe a shout out to a company called SafeLock.ai. They do comprehensive checks on your education, on anything they can find on you. Great company. So,
And right now, how many pitch do you usually see in a week?
yeah, so we actually now have one analyst, so he's filtering it. So we only meet once a week. Let's say I myself, I look at 3 to 5 companies per week. Yeah, but it's pre-filtered. Actually, it's a good question. I don't know how many decks we have received.
When you were in being an angels, like what's a good number? Like if you want to go do investment, how active or how often should look up for yeah deals or pitches or anything. So
Oh,
especially
yeah.
for you to get the as many deals that you mentioned before.
I'm not sure if there's a good number. Maybe it's a little bit of a breakdown. How much money can you allocate? I don't know how much money. Let's pick a number, 100,000. Then you want to do tickets of 5 to 10,000. So you're looking at investments, 10 to 20 investments in a year. So obviously the minimum numbers, you have to look at 10 companies, right? And on the other hand, and then you have to invest in all of these companies. So that's the minimum. The day has 24 hours. Maybe you don't want to spend too much on that. So 2 hours a day maximum, I would say, on decks. But now it's also quite nice, with ChatGPT. You can just take the deck, run it through it, let it analyze. Now they know me so well, they didn't know what I like, what I don't like, or she. So I cannot point to a number.
Okay, but I think that approach of being an angel investor, you need to also set target to yourself, like based on the amount of money you have, you break it down to what's your target, and then it gives a strategy on doing this investing. I think it's a good things or basically practice to share to the audience today. And yeah, about the chat GPT, I also heard that some of my friends as well are start to doing that, and the algorithm gets better and better understanding them. So maybe that's something we need to explore as well as a topic. But yeah, with the lesson, with the time, is there anyone maybe from the angels that would like to ask a question? You can raise your hand or you can drop your question in the chat box. It's a rare opportunity to have Christian joining us. Okay, we have. Okay, yeah, Jason, you can ask right away.
All right, sure. Thanks, Raka. And thanks, Christian, for your time today. So I have two questions really. The first is, you might have answered it when you said 10 just now, but how many baskets do you have to put your eggs in? If there's anything you'd like to add to that, well, it would be good to know. But the other question I have is, you've seemed to mention like several like red flags that you might see in some people. Were there any like false red flags that you think was a red flag and you decide not to invest, but it turns out that, oh, this wasn't a problem in the long run, or they succeeded?
Okay, I really like the second question. To be honest, I probably have to think about it in hindsight, because there are so many deals out there that we obviously have passed on. Phew. Yeah, okay. So there was second-hand feedback on one company regarding a founder, and we decided not to go into that deal. Turned out to be a great company. Yeah, so sometimes maybe you also have to trust the source, or you do a background check on that source, right? Yeah, there was one. So regarding the baskets, I guess we all have to come up with our own diversification strategy. I think at this point, I'm mostly really not in the private markets anymore, much more in public markets, because at this stage in life with 3 kids and all, I like liquidity, so you can pull out money anytime. So right now I'm just running the VC investments. I let them run. So I'm an LP in 3 VCs as well. So I don't do as much angeling. Yeah, I let them do it. Yeah, I don't know if that it really depends, because I think angel investment, yeah, some people might call it's like a casino, right? And the more money you made, the less risk you want to take, right? So I have reduced my exposure to early startup investments a bit now.
I see. Fair. Thank you.
Okay. Do you have any follow-up question, Jason?
Not really, although I can relate to public markets having more liquidity. Yeah, it's important sometimes. I just want to withdraw it for any reason. But no, that's all from me. Thank you.
Thank you. Okay, anyone else want to have questions? Maybe you can also type your question in the chat box and I can help to read it for you. Okay, maybe if not, then I have one bridging. Oh, Chris Johnson. Yes.
Okay.
Hi, Christian. Thanks.
Hi, Chris.
Yeah, I have a question regarding founders. You said basically you're investing in founders, right? But there's a second dimension also, the relationships between the founders, right? You could have maybe 3 brilliant, great guys, but they're not harmonizing. Or what is your thoughts on that?
Yeah.
And how do you evaluate that?
That's a good question too. So when we have pitches, then we always want all co-founders to join to sort of understand how's the chemistry between them. Also, maybe it refers back to the other question that Jason had before. So there was one company where we felt founder chemistry wasn't as good. Turned out to be a great company, but because of chemistry, we didn't invest. So at least when it comes to personal introduction, it's also I guess it's a advice for founders who want to raise. That's your picture, then just introduce yourself, right? So at least you spoke 2 minutes during the meeting. I don't like it if the CEO just talks about his CTO who's present, his CMO who's present. They should talk by themselves, because it also shines some light or sheds some light on the office dynamics, right? And I guess in a very healthy founder relationship it's like they can spar like boxers, right? You have an idea, here's an idea, you can challenge, they can challenge, and to some extent I feel that during a pitch you can see that the chemistry is not right on day one before shit hits the fan. That's really not good.
Okay, good. Thanks.
Thank you. Thank you, Chris. Okay, maybe one more questions from the audience? If not, I have one bridge question. Yeah, because our topic was about pitch, and And sometimes pitch is just the very surface level. It's like maybe the first time, and maybe founders already prepared that, like with hundreds of, but from the way you share as well, like most of the problems are sometimes internally with the founders and so on. And do you maybe like share from your experience? I assume you've been to these pitch events and so on and so forth. But how do what is your approach like? Okay, after the pitch, do you like connect with them, and how much time do you usually give? And yeah, maybe because mostly I think especially for the angels in this community, they know about pitch event, but the steps after that maybe sometimes that haven't belum pernah dibahas ya, or haven't discussed in a lot of discussion. Maybe you can guide us through your experience, or maybe to your approach on that.
Yeah. So obviously we want to give the founders a little bit of homework, right? There will always be some open questions. Yeah, like I mentioned, hopefully they didn't try to force a stupid answer. So we give them time, of course. I mean, as long as they take, because timeline is strict on their end than on ours, right? The startup has to raise money. We don't have to deploy money, so they probably get back to you much faster. So yeah, we give a little bit of homework. At the same time, we also don't want to be a burden to founders. So we also have homework, right? So when it comes to market sizing, okay, they maybe have a data room, they send us their market sizing, we can do our own check on that and do our own market sizing. But in general, at idea stage, you don't really go super deep. You would also assume that the founders know their market much better than you can do in 2 days. So it's a lot of, well, not a lot of, it's a few basic homework questions. Yeah, you should have questions. I think you should never say yes on the spot. I think there are some guys who used to do that, but there's no need, right? So no rush. And really make sure that you feel comfortable with investing because you understood the whole thing. So if there's one or two things you didn't understand, just you have to ask. You have to ask. But I wouldn't ask for, okay, I want to see all your bank accounts and, you know, can I have my, I don't know, company do a, you know, a check and due diligence on your tech stack. You know, that is just too much of a burden for a founder from a VC, from an angel who's only dropping 20K or 10K, right? So you also have to be self-aware. If you only invest 5, 10, 50,000, don't ask for all these documents. Right? And that's maybe where also the value add can come in, where maybe your judgment is some sort of value add that makes the whole process much faster, right? Because your judgment through your experience requires you to make a decision on much less data points. Yeah, again, to my example, $1 from this guy, $1 from that guy who asked 50 questions. Yeah, I take this guy's money. Right? So just be self-aware.
Yeah, I think it's yeah, the point of also giving homeworks and basically see how they basically reacts after that pitch, yeah, after that smoke and mirrors at the beginning. And
because
maybe
also
if
it goes back, because it's so risky, right? Of course you give
yeah,
homework.
true.
So what I said is, for me, angel investing is about making money. You invest money and you return more than you invested. A very important point of that is also, of course, you don't want to lose money, right?
Yeah.
But that's also easily overlooked by people. So don't blindly invest.
So my next question is gonna be a bit more. I'm trying to get a more tangible examples for the angels, but yeah, and not in the meaning of trying to uncover your pockets now, but maybe currently at this point in time, like what ideas or topics do you currently looking for, especially in terms of investment opportunities? Yeah, maybe that can help basically give insights to the angels here, like on maybe which direction they should start to put their eyes on.
Yes, as an angel, how do you make money? I guess you can invest very early and then you leave at an exit. What can the exit be? It's a acquisition by a bigger company. or in some cases, you go public stock exchange. That's a lot of things that can happen in between. So on this route, obviously, you need new guys to invest. VCs, right? So you have Series A, seed guys, Series A, VC, all the way. So as an angel, it's also very important to understand what do these guys actually want, right? Because you're their salesperson. At the end of the day, startups, not for a founder, right? But for me as an angel or as an investor, it's actually a sales pipeline, right? I have to be very close with the guys who are looking at seed and Series A, because I'm the first check. So it's not purely personal taste what I'm investing into, right? I'm a pragmatic guy. If I know, okay, these days people are looking into F&B and deep digital native brands, then maybe I place my bets there, because the likelihood that there will be a follow-on investment is much higher if I invest in something that is hot. It sounds stupid, but it's the truth. Investment in the private sector is a little bit like herd thinking. So you have to know what the bigger guys want. Right now, what the bigger guys want is profitable businesses, and so I'm looking into profitable businesses that are easily scalable. I guess the last company that raised money from a bigger investor, that was 1 week ago. That's a Beef Bowl, and they're very smart when it comes to scaling up, and they're reducing costs. They just raised 10 million. And we knew that's the kind of appetite that investors now have. Predictable growth. So you mentioned the topic of exponential growth, which is the dream. We looked at linear growth, which is so because, you know, $1 in gets you X dollar out. So $2 in gets you 2X dollar out, right? So that's linear. But with these new concepts like this rice bowl, at least you have the predictability. Yeah. If I put X money in, when is the market saturated? At this point or at that point? If it's at that point, maybe then it's still attracted, even though it's not purely exponential, right? And that is something that basically the bigger VCs told us. It's something that they're looking into. So of course we are out here looking for those kind of deals, right? It's not all about our personal passion or what we like, what we enjoy, because at the end of the day, it's, for me at least, it's about making money. I know there's a lot of impact investors out there as well, which for me is a totally different topic. So if you want to talk about, what you call it, being an effective altruist, that's also a topic that I enjoy quite a lot. But for me, it doesn't have much to do with anything.
Okay.
Yeah, so
First of all, thank you for
also
sharing.
you
What,
have to be very flexible and agile, and
yeah.
cannot be here for 10 years and say, okay, I will only invest in coffee startups.
But yeah, thank you for sharing what currently the bigger guys are looking for. And yeah, I think the good thing is of this interaction, yeah, although the programs are for angels, but it's important as well to look at where basically the bigger guys are going. It's a good indicator.
And maybe
but
one
we
more
need-
thing also,
Yeah.
very important. What are they looking for? But maybe even more important, what are they not looking for at all?
They
right?
are not looking
So
for
you can, it's probably also something for founders. So agri-tech, very tough. If you want to do super tech heavy stuff in Indonesia, maybe also not easy to raise money. So as an angel, do you want to join something like that? Maybe also probably not. So the homework for an angel should always be, what are Series A investors investing into right now?
Yeah, but I think it's a good thing. And because actually last week we had a session with impact investors, so now we kind of have both of the views. But yeah, because the time is already runs up, and yeah, I don't think anyone else wanna ask question. I think let's wrap the discussion with Christian today. Thank you very much, Christian, for sharing the insights and a very, I would say, on hands insight that we have. Yeah, with that, we'll also just a bit of preview for the next week activity for the angels. And interestingly, Christian was mentioning that what the bigger guys are looking for, mostly, tadi you mentioned beef bowl, yeah. So Actually, today's activity and the next week activity is a bit connected because today we kind of get how to negotiate and what to ask in the pitch. Christine mentions about bits and atoms and also how to approach a pitch, but also in a pitch is to see basically the expertise of the founders, but also to give them homework and to see what their response is. So next week we're gonna do with the angels more of an offline activity. So we're gonna do a speed dating and role playing exercise, and we're gonna visit Food Lab. It's a program by Smesco Indonesia, and on this event next week we're gonna have food tasting. So businesses, mostly food and beverage businesses, they will give you a pitch, but also give you food tasting, and this is where we can basically apply what we learned today in next week activity. And maybe because Christian was mentioning, it's a good thing to look at, a good industry to look at. So you guys who are able and interested to participate, please let us know. Our team has been reaching to you personally this week to confirm your attendance. And without further ado, I think we can end the discussion today. Thank you very much for the time, both angels and speakers. As usual, we have quick polling just to get your ideas on today's session. But we don't want to keep you much longer.
Okay.
Open this. Okay, for Christian, thank you very much for
Thank you very
your
much.
time. Feel free to
Have a great
leave.
evening, everyone.
Have a
Okay.
great
Bye-bye.
evening. Bye-bye.
Okay. Thank you.
And we will close the voting